I like that background.
Yeah. Yeah.
I said, since I'm back in the office, I'm gonna just keep buying it.
Yes.
But when
Yes.
I'm at home,
Yes. 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 I love that shirt, by the way, too.
thank you, thank you. I
Yeah.
told you I got a few of them.
Yeah.
It's
I
my
love that.
main logo. So
Yeah.
we're live. We're just gonna let a couple of people come in, chime in, um, and then we will get started. I'm gonna also get on TikTok and set this up. Hello, Miss Temple. She says, "Hey, ladies."
Hi.
It is Tax Tip Tuesday. Tax Tip Tuesday. That's what Shayla and I. That's why we're gonna call Tuesday.
Tax Tips
Talk to y'all
Tuesday.
about these taxes. What's going on in the tax world?
Everybody doing on this beautiful, beautiful Tuesday afternoon?
I'm glad we got some decent weather here in Chicago, cause baby,
So cold there. Oh gosh, I couldn't make it.
it's some we call it summertime shy right now. We in summertime shy right now. TikTok, I don't know. Yeah, man, y'all might not be on this sucker today because I'm not gonna be holding this camera. I gotta get me one of those stands. I always see the TikTok people with those stands.
A little tripod.
Uh-huh. I'm gonna get me one of those. I was supposed to be in Vegas actually last week, but I didn't. I ended up not coming. It was a conference, an insurance conference that they had out there. But yeah, I know it's hot in Vegas Temple.
And dry heat.
That real dry heat. That real dry heat.
I love Vegas though. Oh my gosh. Everybody is just so, hi, how are you? Held the doors open for you. That type. I love that Vegas vibe.
That's that southern hospitality that y'all give,
Yeah.
Michelle.
Yeah, I call it Vegas vibes.
All right, I'm trying to see where I'm gonna put these folks at. TikTok, I'm gonna try to have y'all on here. If not, then you need to go to my YouTube channel under Patrice L. Stewart. We are broadcasting on the YouTube channel under Patrice L. Stewart. So if at any moment I go out here on TikTok or you guys can't see it anymore, then go over to the YouTube page, okay? Because that is where Temple says, yes, Lord, Mychaela, about that heat. All right, let's see. About to sit y'all that way. I don't know if y'all can really see or not. We ain't gonna worry about it. If they could see, cool. If they can't, they could go on over to the channel. All right. Good afternoon. Good afternoon. Good afternoon, beautiful people. So here you have today here in the I just lost my whole train of thought. I'm sorry.
In the lab.
Look, it's my first real day back in the office after 45 days. We go chuck that up, right? We're not gonna hold that against me. But we have the lovely Mychaela Vanison on again on Tuesdays. As we said, Tuesday and Fridays are gonna be Mychaela and I days where we kind of come on and talk to you guys about different financial topics. So today, what we're gonna be going over is the ERC credit, which is the employee retention credit. Okay. And then I'm going to go ahead and give the floor over to Miss Mychaela right now so she can introduce herself. And then we will go ahead and get started. I do want to just also let you all know that we are actually going to be doing a full-fledged workshop on this ERC. So today we're kind of just giving you a summary of it, but then on Tuesday, on August 30th, from 6 o'clock Central Standard Time to 7 p.m. 6 o'clock Central Standard Time and 7 o'clock Eastern Time. We'll be hosting this workshop together. So if you guys are interested, we'll put the text link up for you to be able to text our phone number. You can get the link, and then that way you'll be able to join that workshop. But today we're going to go over pretty much some highlights of the program for you if you were not familiar with it. All right, Miss Michele, I'm passing the floor on over.
Hey, everybody. Happy Tuesday afternoon. I am Mychaela Vanison, the organizational founder and owner of Premier Tax and Financial Solutions located in Alpharetta, Georgia. And today we are, as Patrice stated, we're going to talk to you guys just a little bit about ERC, which is the Employee Retention Credit. So if you are a business owner and you're on this live, I want you to listen very carefully as I'm going to pretty much list out in detail what ERC is and who qualifies for it, right? So let's just jump right into it and let's talk about just basically understanding this credit. Now, some of you may hear the word ERTC and ERC is used interchangeably. To be honest with you, a lot of folks, they don't really like using the word tax credit, because when you hear tax credit, you think that that's a credit that you could get. And it could be confusing to think that it's for individuals, but this is for employers, right? So when the COVID-19 pandemic took hold, life and business as we know it, guys, before it came to a screeching halt. I don't know about y'all, but I was tired of being in that house, but in response to that, the government introduced this particular ERC credit to help employers retain staff as well as weather the economic storm. So that's why it was created. It is a part of the CARES Act, which was a part of that $2.2 trillion economic stimulus bill that was signed into law back in March of 2020. Now, since its introduction, I will say that this credit, the ERC credit, has been extended as part of the Consolidated Appropriations Act of 2021 through the first 2 quarters of that year. So y'all, it's a lot of moving parts with this tax credit. Like we started off with it back in 2020, it ended, and they came back and made some extensions, and now here we are in 2022 talking about it. So let me just give you some facts around it, right? So in August of 2021, it was extended for a 3rd time through that American Rescue Plan of 2021. So this tax credit, it was sunset in the fall of 2021. A lot of qualifying organizations, I want you to know, you guys can still file the claims through the remainder of 2022. And listen to this, well off into 2023, 2024, 2025. We're going to talk about that, though, during that workshop. So let's talk about what this credit is. And basically, guys, it's a refundable payroll tax credit that was designed to encourage employers whose companies was disrupted by the pandemic, those restrictions that came behind it, to keep those employees, keep them on payroll and collecting paychecks through that downturn in their business, right? This credit, it is equal to a percentage of qualified wages paid to employees by eligible employers, and can also include some health insurance costs. So some of you business owners out there, you may pay some health insurance costs. So that goes hand in hand with the percentage of the qualified wages that you pay. Now, the percentages, it has varied since this inception of this credit, but let me just give you guys a little bit about these percentages and how they roll. So, Patrice, now from March 12th of 2020 to before January 1st, 2021, employers could claim this credit against 50% of the qualified wages paid. Listen, up to $10,000 per eligible employee annually. That's how it was in the beginning, right? Then we had the Consolidated Appropriations Act of 2021. It extended that credit, as I just said, to wages paid after January 1st, 2021 to before June 30th, 2021. Instead of up to $10,000 in wages per employee paid annually, this act enabled qualified employers to claim a credit against 70% of qualified wages paid. Hence why we keep saying this up to $26,000. I'm getting into that, right? So with the credit of that $10,000 per employee per quarter, as opposed to the previous amount of it annually. Now, let's talk about the new legislation. So, new legislation states that for the third and fourth quarters of 2021, now that's the wages that were paid after June 30th, 2021 to before January 1st, 2022, employers can claim this refundable tax credit of up to 70% of qualified wages paid to employees with a maximum credit of $7,000 per employee per quarter. So business owners, you know how many quarters are there?
4 quarters.
4 quarters. Now, right now, Patrice, it's just simply for 3 quarters, but we haven't talked about it yet. But that IRA, that Inflation Reduction Act, has been signed. I think I saw a live that went where it is. So we're going to talk about that during the workshop. Now, let's talk about some of the businesses that qualify for this tax credit really quick, so you guys will be on the up and up about that. So this credit, guys, is available to nearly all private sector employers that lost significant business, or if you had to be fully or partially suspended, like if your operations were partially suspended due to the pandemic, you can apply for this. That includes hospitals, colleges, universities, and some 501c organizations. All of you guys are eligible. You just had to have ran payroll, right? So basically, as you guys know, we talked about PPP loans a couple of weeks ago, and what we were surrounding about that. In case you have a question in terms of, well, I received a PPP loan, can I qualify for this too? Yes, there are stipulations, but yes, if you got PPP loan, if you got EIDL loan or grant, you can still claim this ERTC credit, right?
So okay, that's good to know.
That okay. Yes, so you can. However, there is a stipulation into that. You cannot double dip. We'll talk about that double dipping a little bit later. So basically, let me tell you how you qualify for it, right? So you must have operated a trade or business during the calendar years 2020 or 2021. And according to the IRS guys, you had to have experienced an interruption of operations during any of the listed periods because of limited commerce, travel, group meetings, or whatever that was caused by the COVID-19. So that's just a simple IRS definition right there. Now, employers can also qualify. This is one I want y'all to really listen to right here. Employers can also qualify by calculating your gross receipts in each quarter compared to past comparable quarters. I want y'all to keep the year 2019 in your head, in accordance with the specific requirements concerning compared gross receipts during these specific time frames. So basically, if your gross receipts in a quarter are below 50% of your gross receipts of that same calendar quarter in 2019, an employer qualifies. If your quarterly gross receipts exceeded, I think it's 80% in the calendar quarter immediately following, compared to that same calendar quarter in 2019, you don't. So there are certain stipulations as to who qualifies and who doesn't, right? I will say that under that Consolidation Appropriations Act that I mentioned earlier back in 2021, those impacted by those forced closures and quarantines, if you experience more than a 20% drop in gross receipts compared to the same quarter in 2019, you qualify as well. I will also say that you need to get with your payroll company. If you didn't run payroll, I'm not talking to you.
Right.
Ran payroll.
Ran payroll.
Yes. If you ran payroll and you filed your annual and quarterly tax returns, I'm talking to you, right? So another thing to note, that this is for the business owners who did when it relates as to the employee wages that qualify for this particular credit. Basically, you'll typically qualify um, for any expenses that had to have been paid after March 12th and prior in 2020 and prior to January 1st, 2022. So there are rules and stipulations as to the time frame of when you guys paid your employee wages, right? You notice that I also mentioned the health insurance. If you had health insurance and you paid that, that can be calculated in multiple ways. The good thing is that you have someone like Patrice and I who are on here talking about it. Some of this stuff may seem like a lot of jargon to you, but we're here to help you and here to help you navigate how you can qualify for this credit, because you may hear some people saying, oh, it's easy to do. I'm not going to tell you that it's not easy to do. However, there are a lot of things that come from this, right? We talked about that $80 billion that has been appropriated to the IRS, with them hiring those 87,000 new agents. Half of that money, as you know, we told you is going to go to enforcement, which is collections. So you don't want to go at this alone. You don't want to. I see, Patrice, that there are some calculators that you can go in and you can see if you qualify. That's just a calculator. That doesn't mean you'll get that. So I would kind of stay away from that. And if you have any questions beyond this, please reach out to us and ask us that, right? So also, let's going back to the employee wages, wage qualifications for this particular credit. It does vary depending on the size of your business and the number of full-time employees who work 30 hours a week or 130 hours a month. So you may have some questions about, what if I had a part-time employee? Those are questions that we'll be able to answer during that workshop, right? All right, so now, how do the credits work? So in 2020, the non-refundable piece of this ERTC was claimed against Social Security taxes. However, this ARP Act changed that, specifying that for wages paid after June 30th in 2021, that non-refundable piece of the ERTC should be claimed against Medicare taxes instead. For those of you who are employers, you know what I'm talking about, the Social Security and Medicare taxes that you have to, that employees are responsible for, right? But if the credit received by the employer exceeds your total liability portion of the Social Security or Medicare, the excess will be refunded to you. So it's benefits in this, right? Now, I will tell you, if you're thinking, well, I've already filed my taxes, I'm going to let you know, and we're going to talk about that during the workshop. It is definitely worth you filing an amendment. It's not going to be a quick turnaround for you to get this money, but I've done the calculations and it's definitely worth it. Once I get finished with just basically giving you just the education and information about it, I'm going to tell you how the numbers come up to you just getting one employee, right? So we'll talk about how a business files for this credit. You can file for this credit by filing your quarterly taxes using this file, a form 941, and that's just your quarterly federal tax return. Some of you guys know what that is. Some of you guys may not know what that is, but that's why you have financial advisors, you have tax strategists, you have people like Patrice and I who can help you navigate through this. Okay. Now, a question that's everybody's asking me is, can we still file for this tax credit in 22? I gave you the answer earlier. That is a simple yes. But when the Infrastructure Investment and Jobs Act, it was signed into law in November of 21, it moved that sunset data for this ERTC to September 30th, 2021. However, if you didn't file before, you can still apply for this based on your financials during March 13th, 2020 through September 30th, 2021. That's just the definitions of ERTC, how you qualify for it, how it works. I hope that you guys can understand what I was saying, because it is a lot of
It's
jargon.
a lot. Yeah.
It's a lot.
Let me just try to confirm or clarify this one last part with you, Michele, that you just said. So from March 1st, 2020 up until
Yes.
September 30th, 2021. If they ran payroll in between that period, this is what this credit is qualifying from, right? In a
That's
nutshell.
correct.
Okay.
That's correct. That's correct.
And so, like she said, when we do the formal workshop, you guys will see a lot more. You'll see the PowerPoint. We'll have wording versus kind of like she's saying here. It's a lot when you're just hearing somebody, but when you're actually able to see it in black and white in writing, and that's where we go more in detail in the workshop for that. All right. But like she just said, to kind of summarize it, if you ran payroll between March 2020 all the way up until September 30th, 2021. That's like your qualifying period. And then that's what we'll get to calculating, like, what do you qualify from that?
Yeah, and in this workshop, we're going to have a presentation. I'm going to do a presentation because I know even listen to myself say it, it's like a lot of vomit of, oh gosh, what is this? I don't want to do this. All I want you to know is this is the simplest way that I can say it. If you are a business owner and you ran payroll for qualified employees and you paid wages, you paid your employees, you may qualify for this credit. Now, I want to just go ahead on and put it out there. If you have family members that you put on payroll, and let's say you have an S corp or something like that, and they have over 50% of ownership, they don't qualify. You don't qualify. If you yourself put yourself on payroll and you're the sole owner, you won't qualify. But if you do have, now I will say this, if you don't have any living relatives, I know that's a little harsh to say, but if you don't have any living relatives, you can qualify. So I'm gonna say that one more time. If you are a S corp owner and you have people who you hire, meaning let's just say you have your mom, your daughter, your grandchild, or whoever, and if you have them listed as shareholders in that company and you pay them over 50% and they're listed as over 50%, they don't qualify. You don't qualify. So it has to be a family member that they pretty much have less than 50% of ownership in that business. Did that make sense what I said, Patrice?
Yes. Well,
Okay.
that last part really made sense because a lot of
Yeah.
people may not necessarily, the family members may not necessarily have ownership. So if they have no ownership and you literally just paying them payroll, they could still possibly qualify.
Possibly, but not likely because they're family members.
Because they're family members. Okay.
Yeah. Yeah, they're family members. So that is the rule with family members. That's why I said if you are an owner and let's just say you're the 100% owner and you don't have any living relatives, then you would qualify. But that's the only way that you would qualify for this particular credit.
Okay.
And go ahead.
No, I was gonna say Michele is a lot more well versed in this particular credit, which is why she's doing most of the presentation. I'm not big with payroll, so I didn't study a lot of the ERC. So, but Michele is well versed in this credit. So, and then also, like you said, if they did run payroll, let's say they ran it with like an ADP kind of company, that actually kind of makes it a little bit simpler, right?
Simpler, easier, better. Yeah, because they're going to take into consideration the payroll that you ran. And when you're using a company that is reputable as ADP, I use ADP myself. It lessens the chance of you getting audited, which is why I brought up what we talked about last week with the PPP fraud and the hiring of these IRS agents. I did read that ERC recipients, because just think about it. if the tax years are already gone where you file these taxes, or you were supposed to, you were supposed to file these taxes if you're a business owner and you needed to file 941s, you actually have to go back just to get this credit. You have to go back and file an amendment to do this. So it's a process. I don't think the IRS is going to say, hey, we're just going to select this person and audit this person. But anytime that you file an amendment or whatever, it is going to be looked at by an extra set of hands. That still is not enough for you to not do this, or at least find out information on it. Because I just want to give you, I got this from another CPA's YouTube, and he basically gave an example of, let's just say you pay one employee $12 an hour, right? Let's just say that employee is full time, right? So you had that employee who's $12 an hour. Everybody take out their calculators. I want y'all to do this. Take out your calculators, right?
Calculate out.
All right. So let's say you get paid $12 an hour, and at 40 hours a week, somebody put in the chat how much that is a week.
So you're going to put $12 an hour times 40 hours. So how much is that a week? I got it, but I want them to type it in.
Okay.
Simple, what you come up with? 480.
$480 a week. Now, we're all business owners over here, so nobody's saying $12 an hour. We're just using this for an example, okay? If you make $12 an hour, that's all right. We'll help you later on, show you how to get some more money. But $480 a week, right? Now, Temple, time that times 4.
So 480 times 4. $1,920.
You get $1,920 that you've made for the month, right? Now, there are 4 quarters that you have to file for, but right now we're dealing with 3 quarters because that's how they're calculating this, right? So the math is, when you do 3 quarters for that particular month times 1 employee, and then I'm just going to come up with my own numbers here. That would give you, because the percentage is 70%. You guys remember when I said that 70% that they're giving you, that 70% is going to yield $5,760 when you put your entire wages for those quarters. So you basically, let me not go too fast. So 1920, Temple, you got the 1,920 that you get in a month. You got to times that times the 3 quarters. When you get that, you're going to get $5,760 that the employer is going to get credit for. So you get that $5,760.
But how did you get to the $5,760? Because you just told them to multiply it by 3 quarters. But what are they multiplying that?
That $1,920.
Right. The 1,920 is times what though? Because you said 3 quarters.
So multiply by 3 times 3. Yep.
Okay, that's how you got to the 57.
That's how you get to the 5760, right? That would make for those quarters that employer is eligible for. So now we're going to get to the calculation of the actual ERTC, right? So you guys heard me say 70%. They came back and changed the rules, and this is for 2022, the 70%, right? So what you're going to do is multiply that 5,760 times the 70%.
Okay.
And you are going to get, or 0.7, you are going to get $4,032 that one employer got for that one employee. $12 an hour. This employee is making $5,760 for those 3 quarters. You multiply the 70% that the IRS is giving that calculation, and that employer is going to get a 4,032 credit for one
For
employee.
one employee, right? That's just one employee.
That's just one employee. So let's say you got 5 employees who make the same, do this, you multiply that 4,032 times 5, that is
$20,000.
$20,160. So that's why I wanted to let you guys, your employers, know that if you've already filed, it is okay and definitely worth it to go back and do
Do an
an
amendment.
amendment.
Yeah.
Okay. Don't leave this money on the table. So
Yeah.
some of this stuff may seem confusing, but that's why you need to hire a tax pro who can go in here and do these things for you, right? You can't just go, believe it or not, Patrice, I have already heard and talked to a few people, there is ERC fraud going on.
Oh, we know.
I don't know how they're doing it.
I don't know, girl. That's why I
So-
told them while I was on vacation. Look at this as a loan for those of you that are out here doing this crap fraudulently, because baby, it's coming back.
Yes.
It's coming back. Anything that you're dealing with payroll, you guys have to actually run payroll. So you know when you run payroll, you're paying FICA, you're paying Medicare, you're paying state taxes, you're paying federal. You get what I'm saying? It's not
Yeah.
like when you're self-employed or you're a 1099 contractor and you're claiming cash income. When you're saying that you're running payroll, it's a totally different ball game. So
Yeah. I just see that this is a portion of the tax world where we're not being educated, and we're not putting this information out there. And even though this was a lot for you guys to probably absorb and digest, the simple, straight to the fact is, if you're a business owner, you ran payroll, you're a qualified employer, you have qualified employees, then you have qualified wages. That's the
right.
that's the
That's the
tax
main
word,
thing.
qualified wages. I don't care if you ran payroll for just one quarter.
You
You
still could
still need to
qualify.
see if you can qualify. You know, now I will be honest with you, this money is not going to come to you quickly. However, it's still worth doing it. You're not going to get a direct deposit. You're going to get a check from the IRS. It is definitely worth doing it because you work hard in your businesses. You actually doing the right thing in your business by running payroll properly through a payroll provider. You deserve to get this money that they have out here for you guys.
Yes,
In the workshop, I'm going to talk about the percentages of who's getting it or who's already gotten it and who hasn't. The reason why it's taking a longer time now, Patrice, to get it is because the IRS is behind. And a lot of people are getting in the know of, but our people aren't. So that's why we're here to talk to you guys about it. If you're a business owner, you running payroll, you need to join this ERC workshop.
yes.
That way we can provide you more detailed information about it and work with you hand in hand, because the people that I partner and work with, not only are we going to process your ERTC credit, we're going within doing that, we're going to make sure that we minimize any litigation, any risk, any of that. Like, I work with payroll providers, I work with auditors, and they basically audit all of my files, my ERTC files, just to make sure before they even get sent out that this is done right. That's how I found out that there was fraud going on, Pratis. And I'm like, how are these people doing this? And all I could think of is what we know that people do, when they do that type of stuff. And we just want to show you that if you're a legitimate business owner, you ran payroll, you can definitely qualify for this ERC credit. Okay.
Yep.
So does anybody have
the legal right way, business owners, right? This is again what we're reiterating. Business owners, you have to work with legitimate professionals that are going to show you the right and the proper way of doing it. Not the other way that some of the fraud people are doing it as.
Yeah, it's not necessary,
Yeah.
and even this is a teaching moment for us all as business owners. If you're not running payroll, it's not too late. Go ahead on and start running payroll in your businesses so that you can take advantage of credits and things like this for business owners. So we're going to talk about in their workshop, Patrice, how far back they can go and how long this is going to last. So I want to let you business owners know, I'm not going to say it today, but I want to let you know you've got some time. You've got some time. You don't have a huge window, but you definitely have some time. So if you have questions, if you need some resources, Patrice and I are here to help you.
If you guys have any questions right now, this will be the time that you can go ahead and put them in the comment if you'd like.
Trying to see if it's anything I missed. And I want to clarify those dates, Patrice. This is just in my notes that I have. Employers can take advantage of this credit against federal employment taxes via the qualified wages paid to their employees from March. It's March 13th, 2020 to September 30th, 2021. And how we're saying that you can still get this because you can retroactively claim this credit against past quarters. So that's how you're able to get this money. It's nothing that you're really doing right now. They're doing comparisons from the business. Let's say that business experienced a 50% decline in gross receipts during any other quarter of 2020 versus that same quarter in 2019, and or a 20% decline in your receipts or your gross income 2021 against that same quarter in 2019. So guys, what that means is this comparison that they're doing in the reduction of your business from 2020 and 2021 is compared against 2019. And I also want to let them know there is no cap on employees. It is easier for small businesses to take advantage, but there is no cap on employees. So if you got 10 employees and you didn't file for this credit, you better call us.
Yes, ma'am, because that's where it is. That is exactly where it is. And again, like she said, if you need assistance with it, this is definitely something that Mychaela is opening and doing and helping assist with those of you guys who need it.
Yeah, this is one of our lives, Patrice, where it's just informative. It's not really where we're talking a lot of ha 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 hoo, none of that. This is strictly just information, letting us know that there's a credit out here where you can get money, and we're here to help you. But I'm very excited. I'm very excited to help you guys. I want you to know that I want to help you get this money.
And she does, because she's been talking about this credit, for a while with you guys. Well, with me. And that's what I said, because I personally don't deal with and handle a lot of payroll, but learning this credit from Mychaela, it definitely brings a lot of value. And then, like you said, with that one example that you just gave, which was pretty much them utilizing an example for one employee, paying an employee paying one employee $12. Your possible credit was around $4,000. That's a lot. That's
Yeah.
a lot. So they're
Yeah.
pretty much giving you 70% back of what you paid out.
Yeah, each year is different because they came back. Because keep in mind, guys, this credit they started back in 2020, so there's definitely been some changes, and that's how that number keeps going. And they've gotten better and better because if you remember when I was talking about those percentages earlier, they were only paying up to $10,000 per employee annually. Now they're going back and doing it per quarter.
Per quarter. Okay. Okay. So that's when I first saw that 10,000. That's what that was. But now you see up to 26,000. I know that's what JJ, the CPA, always promotes on his, up to 26,000 per employee.
Yeah, and how you get that is because of the 70%, the new one with that 70%. Because keep in mind, it was only before, it was only the 50% of those qualified wages paid. So what that basically means, look at my calendar, my calculator. Let's say you paid $10,000. At first, it was up to 50%. So times 0.5. That's at $5,000. That's where you get to the up to $5,000. And then now it's the 70%. So now it's up to the 7,000. So you're actually adding those quarters. That's how that number is aggregating up to the 26,000. So it's an aggregation of each of those years. But some of you guys haven't even filed for this or did it. So you just imagine you coming up with these numbers that you have when you see the payroll. Because I'm telling you, payroll costs are not cheap. They're not cheap. So it is so good to be able to get some credit, for what you paid out. Like, come on, tap in, y'all. It's not gonna be here for long.
Exactly.
Exactly.
You
Yeah.
definitely have to take advantage of this while they have it, like you said.
Yeah. So if you guys have any questions, if you guys go and Google this or look this up, and there's a question that you have that we maybe didn't cover or didn't answer, please put it in the chats, and I'll be more than happy, or Patrice, for us to answer those questions for you. But the whole gist of it is, don't go out of the loan. Oh, she told me about ERTC. I did this. I'm not going to pay anybody. I'm going to just do it myself. I can tell you, I wouldn't do that. To be honest, I wouldn't do that. Because it's not just something simple that you can just fill out and send in. Then you're going to get into a paper pushing war with the IRS. And you don't want to do that.
The only question that we have is, what are the chances of getting audited? We kind of went over that before.
I would say that it's a medium. If I had to say high, low, or medium. But if you ran payroll once again and you let a professional do it for you, that professional is going to make sure that everything is being done in the right way. So your chances of getting audited when you go that route will be very minimal. Doing it alone, I would say your chances will be high, because you may just go in there and just put in some numbers. Because as I said earlier, they do have websites where they have ERTC calculators, and you just it just asks you how many employees did you have, and it just spits out a number like 52,000,
Right.
But there are certain avenues that you have to take. There's a process, there's a protocol that you have to, just with filing regular taxes. It's no different. This is just you basically letting the IRS know, hey, give me some credit for the for the money that I paid on these qualified wages or whatever.
They're asking, are they targeting low or middle class? So this is regarding business. So this isn't the topic that we're talking about right now, is not regarding individuals. This is for business owners. And then I don't know where you're going, or where you're going with the targeting or the auditing question, but one of the things that we also share with you guys regarding audits, any and everybody who files taxes can be audited. Let's just put that out there. Any single person, okay? There is no one size fits all. There is no answer to give you on what are your chances of getting audited. If you're filing taxes, you have a chance of being audited, point blank, period. On average, they do audit about 10 to 12% of tax returns for individuals every single year. A lot of those audits are random, or as we've shared before, there was some kind of red flag that made them decide to audit your profile. So that's the best that we can answer on that one. I don't believe that the IRS is formally targeting low or middle class. They do, and they have blatantly admitted that when it comes to auditing sometimes, just because the rich or the wealthy taxes are a lot more detailed. They have a lot more accounting and people and CPAs that are working on their behalf to come up with credits or tax deductions. So the lower to middle class, I would say probably in their eyes is an easier is an easier one to target, but yeah, that's the best that I can answer that. Do you have anything to add on to that, Mychaela?
Yeah, I mean, so basically with ERTC, it's just a first of all, the form that you need is a tax return. It's any business owner knows that if you run payroll, you have to file Form 941. It's a quarterly tax return. So yeah, that tax return could be subject to becoming audited, but not really, because you're basically reporting something that you're
You
just
could prove.
reporting, yeah, that you could
Yeah.
prove. Now they are aware that there is some ERC fraud going on, so they may take a closer look at some of the people who are now coming into play
Pushing.
with trying to file this credit. But if you run payroll and you do everything the right way, then you have nothing to worry about. That's why we're talking about this, because there's so many people that don't know about this credit.
Right.
So I hope that answers your question. But to answer it, targeting lower middle class, I mean, even with regular taxes, as Patrice said, you really got to be doing some stuff on your taxes for the IRS to, because at the end of the day, um, they're not the enemy. We may call them agents or whatever, but believe it or not, when we're on the phone a lot of times with the IRS, they will, now they will try their best to help you in the best way that you can. When it comes to issues, you're gonna be on hold for a long time. You gotta have a little patience as a popcorn. But they're not out to target anybody or to get anybody. Even with this whole $80 billion that they're added in, um, you guys heard us say over half of that money is going to enforcement, and we told you what enforcement was. Enforcement is a part of collection agencies. So that means people who are already who pretty much are in arrears with the IRS. They owe the IRS. They may be behind on some payments or stuff like that. The low bearing fruit, as we call it, they're gonna come after you first. But just targeting you, low and middle income, not necessarily. I mean, but like Patrice said, they do know that the higher income area, they can hire attorneys, and it's going to be a hard fight between them and the IRS.
Yeah. So like you said, that lower hanging fruit, if you can go get a quick $2,000 from 1,000 people, that's where the IRS go first, right? But the other biggest thing too to say, just to kind of wrap that up with the whole auditing thing, there is nothing wrong with an audit. People are always like so scared and freaking out about an audit, but that's the biggest thing is like, if you are doing what you are supposed to be doing, right? If you have paperwork and proof, and these kids that you're claiming are yours and they actually lived with you, and these businesses that you're claiming is real and you have receipts, it's nothing wrong with an audit. Like, people freak out about audits, but audits are not something to really be scared of, because if you have everything that you're saying that you have on that tax return, then you'll go through an audit just smoothly. So that's the simple as that. We don't have any other questions though, outside of that. So again, if you guys want to join the workshop, the class is 129. It is August 30th, if we decided, right, Mychaela?
Yes, August 30th.
So in that workshop, we'll be going a lot more detailed into it, how to calculate it. You'll get a PowerPoint presentation. We also may even have another rep on the line. We're trying to see if we can get someone from ADP to come on to kind of talk to you guys a little bit more about the forms that should have been filed or that you will be filing. And again, you can text right now. You can text us to 312-680-5468, and you can text ERC class. And then that way we can send you the actual link for the workshop. So that way you can go ahead and get in if you would like to do that. So we got less than 10 minutes, Shayla, if you wanted to say anything else, or we can wrap it up.
Yeah, so I would just say to tax professionals, because I do notice that a lot of tax professionals are just like, I got bookkeeping to worry about, I got taxes to worry about, I got other stuff. I'm not dealing with ERTC. If you have business customers and you have those clients who you know run payroll and you just weren't aware of this or you don't know how to do it, reach out to both Patrice and I, and we can definitely work out something to help your assist you with your clients. So we don't want to leave any money on the table. So if you are a tax professional and you're chiming in and you know for a fact that this is something you may wanted to do, but you just don't have the time, we're definitely here to help you with this. This credit is here. It's going to be here for at least, I think we may have like another 24 months or whatever. We'll talk about that in the workshop, Patrice, about the time frame. Today was just simply letting you know what ERTC is and who potentially qualifies for it. You know, we can't always give you guys all of the detailed information like this. But I will tell you that I've definitely done my research on this. There are a lot of companies out here who I see are promoting it and offering it, but I definitely don't see a lot of people saying we're going to help you not just file this ERTC, but help minimize your risk of getting audited to help you get this check. You know what I'm saying? So if you are a tax professional and you have customers who need some help, reach out to us and get in the workshop. You know, this is another service that you could add to your clientele that you already have. And that's what we want to do. The existing customers that we have, we want to be able to serve them better, you know. So that's
Definitely.
my 2 cents.
And that is the reason why I partnered with Mychaela. So Mychaela can help my clients with this ERC credit because, like I said, I don't mess with payroll, right? But this is what we're saying, get with someone who does so that your clients are not losing. Because as a tax professional, this is definitely something that you should be letting your clients know. And then if that's not something that you directly do, then you definitely want to have a liaison that you could send them to so that they are taking advantage of these credits. Because any of this money that we have access to right now from these different COVID programs, you guys got to understand these are not going to last forever, right? Eventually they're going to start taking stuff away. And so as this money is available, again, that's the reason why we do come on and try to educate more of you. I think this question is kind of off a little bit. Mary says, Patrice, I made the honest mistake on my 2020 taxes regarding how much I received. Will this cause a penalty regarding my stimulus payment? So Mary, you just confused me completely with that last part with regarding your stimulus payment. So one, to answer your first question, if you made a mistake on your 2020 taxes regarding your income, will this cause a penalty? Yes, it can. Because what happens is the IRS, I've explained to you all before, the IRS, let's just say you claim 20,000, but the IRS shows 30,000 worth of income. Yes, that could be a major issue for you because you only claimed 20,000, but 30,000 worth of income was reported. Okay. So in a nutshell, yes, that can definitely cause a penalty and it can cause an issue with your taxes. And actually it's going to be it's going to be considered under reporting your income. So you will see a penalty and you'll have to claim that additional income. They'll do an adjustment themselves. They call it an adjusted tax return. So a lot of times they'll send you the adjustment with the new amount that you owe, which will usually include interest and penalty. And And then regarding the stimulus payments, I don't know what you're talking about with that one. You kind of threw that in after the question. So, does anyone else have any questions? Oh,
did she say what mistake she made? It was regarding how much she.
Yeah, she said, I made an honest mistake on my 2020 tax returns regarding how much I received. Will this cause a penalty? Oh, she's saying, so I guess she's saying regarding how much she received regarding the stimulus payments. So remember how people were saying, oh, I only got 1,200 in stimulus payments, but then the IRS is like, well, you got 1,800.
So Mary, you said you would probably receive a letter in the mail. So if something happened, especially with regarding how much you receive, that's definitely something you need to address, because you wanna send it in before the IRS catches it and sends you a letter. But will this cause a penalty regarding stimulus payments? Depends on how you report it. Did you?
Oh, okay. She said she got a letter.
Okay.
So if you got a letter, it should tell you exactly in the letter, what they're saying or what changes they're making. Did they lower your tax amount, like whatever you were supposed to be getting? Did they say in the letter, like if you was getting 2,000, maybe they said, well, now you're only getting 1,500 because you actually did receive the stimulus payments or something like that. So the letter should be explaining more to you. If you don't understand the letter, then again, you can contact the both of us or one of us for additional assistance with that. You said you got a letter, but it didn't state the amount.
It's not going to state the amount. It's just going to be a letter explaining what she either did or didn't do.
But the letter still should have kind of gave you more clarity on what you claimed on the original tax return. Sometimes they'll tell you we are changing the dollar amount of your refund. You know what I'm saying? Like, we don't want to get too much into your personal tax return on this live, but okay. But then, yeah, like I said, if you need additional assistance with that or you don't understand the letter, I charge $179 to do a tax review. You can also reach out to Mychaela as well. Let me also, Mychaela, or send me in the private chat your email and phone number for your company, and then before we get off, we can put that up as well.
Okay.
But yeah, so like if you guys, even if you came to me, because this is what you all guys also got to understand, like taxes is one thing, but anytime you get letters or other things and you want a professional to review it, I have an appointment on my booking link called a tax review. So in that tax review, if you get letters from the IRS and you need clarification or you need somebody to review the letters, that's what my appointment is considered. It's considered a tax review, and I charge $179 to do that, to review any letters or paperwork. So if you need more clarity on that, Mary, you can. And then let me put Mychaela's information up here too before we log off.
Yep. I see where it says private chat, but how is this going to go to you?
It's just to me.
Okay.
Yep. Because unless you want us to put it in the comments, I didn't know if you can see the comments or not.
I'll send it to you.
Okay. And then I could put it up on the big screen, and then that way they can just take a photo of it.
And let me get my calendar link for you.
Okay. So if any of you all want to shoot Mychaela an email, here's her email address. All right, there's her email address. So that way you can get in contact with her. So take that email address down, and then that way you can contact her to move forward with scheduling an appointment or booking any information with her. And then here is her actual booking site as well. Okay. So there's the booking site, and then again, here is the email. Okay, cool. And then we are coming back on again on Friday. We have some hot topics for you guys that we're going to go over. We also should have some updates regarding the bill, right?
Yes. Yes, I saw that today. I'm like, oh, another topic, hot topic coming through.
And you know what? We might be on tomorrow for Wednesday. I got to get with Michele to see. But we may be on tomorrow, but we definitely are going to be coming back to update you guys more with this PPP information. It's a lot in that bill, in that write up. So I know the last video that we did on Friday about it, we had a lot of comments and feedback after it. So Shayla, we may need to jump on tomorrow again to kind of talk about that before Friday. But if not, if we don't jump on tomorrow, you will see us on Friday for sure.
Yep. May have a special guest for you.
Yes, we're going to be going over some more with that. All right. So I think we are wrapped up for today's for ERC. We'll also come back and remind you guys regarding the workshop for those of you all who need it. I'm also going to go back to that post that we made last week, Shayla, regarding the people who I asked that question, did they take ERC? We had a couple of comments on there, so now I'll let them know that they can join the link and send them the information to join the workshop next week. So thank you all for joining today. We are going to go ahead and wrap up this particular session. We may come on tomorrow. If so, you'll get a notification. Excuse me, you'll get a notification. And if you don't see us tomorrow, we definitely will be back on Friday. Also, we are doing also Chuck and I will be on Thursday to do the last round of the P-Valley series from a financial point of view. So yeah, we'll be looking forward to that one.
Oh, it's coming to a close. I have thoroughly enjoyed that. I
Look,
love
I know. He was like, we got to figure out another movie that we're going to go over right now. So
yeah,
that's go. So that'd be something we could think about. We all could think about that one.
Yep. Guys, if you have any questions between now and then, just have your questions for us, business owners, tax professionals, employees, if you work, so we want to give you a better understanding of what this actually is. So if you have questions, just get your questions and have them ready for us.
Definitely. All right. We are out. We will see you all. If not tomorrow, we'll see you Friday.
All right.